Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure to recognize 2 official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Hello everyone, welcome to the Chingy Good Night Watch on Friday, November 28th. I'm analyst Jiang Da. If you haven't already, please remember to like, subscribe, and share our channel. If you have any investment questions, feel free to leave me a comment. If I don't have time to answer your question today, I'll make sure to address it in detail in the next session. So after yesterday, November 27th, when the US stock market was closed for Thanksgiving, our Chingy Goodnight program also took a break. But today, we're back as usual. Everything is back to normal. I noticed some students thought we were still on holiday. No, not that lucky. Teacher Jiang teaches every day and we live stream every day. Except when the US stock market is closed, our regular live streams continue. Even though today the US market will close early, 3 hours earlier than usual, we're still here as always. But actually, there's still a lot of important data releases and economic factors that I want to share with everyone. So don't think that just because Thanksgiving is over, it's going to be a straight holiday all the way until Christmas. That's not the case. There are plenty of topics and opportunities in this 1-month period. As long as you can grasp these themes, whether it's the end of this year in December or the market next year, you'll have a good chance to seize those opportunities. All right, let's have some fun, everyone. Hello, everyone. We have Hui Juan here in person, and also Anna, the flying fishball, plus brother Yulin, good evening, and Jeffrey as well. Right? Good evening, Louis Yang, hello, and LSF, good evening, good evening. Okay, let's get into today's investment focus. The first topic is whether the Beige Book is actually favorable for rate cuts. Actually, yesterday was suddenly Thanksgiving, but in fact, early yesterday morning, the so-called Federal Reserve's Economic Central Beige Book was released. So what exactly does the Beige Book mention? What kind of information does it include from the various major Federal Reserve bank regions? It covers things like economic growth, inflation, consumer spending, and even changes in inflation and business investment. Basically, what kind of shifts are happening in corporate investment? Why is the market saying that the content of the Beige Book might support a rate cut? But is that really the case? We'll provide some additional insights on that. Also, regarding geopolitical risks, Ukraine and Russia are currently facing 3 major challenges. If these 3 issues can be resolved, there is actually a chance for a ceasefire. Another piece of news is that, aside from the ongoing turmoil between Ukraine and Russia, the market is also concerned about the situation in Venezuela. There are reports that Trump is preparing to send ground troops to launch a land assault targeting Venezuela's drug trafficking operations to deal with the issue. So will this actually have any impact on electricity risk? Whether it's Ukraine and Russia or Venezuela, everyone is paying close attention to this. Now, as for what's on the surface, even though the market was closed yesterday for Thanksgiving, a lot of economic data and earnings reports didn't really have much of an effect on the stock market. However, in Jibang Technology, they specifically mentioned that next year, everyone can pay attention to the top 10 technology trends. If you can really grasp, see clearly, and understand these 10 tech trends, then in fact, for next year's market, and even for 2026, we're about to face not just the 3rd year of a bull market, but with 2026's upward trend, it's likely that the bull market will continue into its 4th year. So which industries should you pay special attention to? These sectors could very well help you earn another pot of gold in 2026. In addition, what does it mean when Bank of America gives its endorsement? We know that one of the biggest events this week was the so-called AI chip war between Nvidia and Google. When it comes to GPUs and TPUs, these two, in this chip war, people are worried about oversupply. But Bank of America, and I want to specifically add this for everyone, still remains optimistic. So who are the 3 AI giants? They are Nvidia, AMD, and Broadcom. So what does he think about these 3 giants? For those of you who hold shares in AI companies like Nvidia, Broadcom, or AMD, how should you view them? Tonight's show will explain everything clearly for everyone. All right, good evening, everyone. I just saw that quite a few people have joined online. 667285, good evening, and Amy Lynn, as well as Y90 and also Sparkling Water. Good evening, everyone. Let's take a look at the economic data. Although the US stock market will close early today, if you invest in mainland China or Hong Kong stocks, you might want to keep an eye on this Sunday. This Sunday, China's official November manufacturing and non-manufacturing PMI data will be released. The previous value for the manufacturing sector was 49. The forecast is for a slight increase to 49.3, but it's still below 50. Generally, when the PMI is above 50, it indicates economic expansion. Below 50 means the economy is leaning more toward contraction. So, since the current data for the manufacturing sector's PMI remains below 50, but for the non-manufacturing sector, it's fluctuating around the 50 mark. The previous actual value was 50.1, and the forecast is 50, almost about to fall below that 50 threshold. No matter how it moves, this data is still worth referencing. In addition to referencing it, actually, the performance of the mainland and Hong Kong stock markets is also important. For the mainland and Hong Kong stock markets, besides looking at the official PMI data, you also need to pay some attention to things like the policies introduced by the mainland authorities, including related monetary and fiscal policies to provide support. Honestly, these have an even greater effect in stimulating the stock market. Another thing to watch is whether the US stock market can continue to lead international markets higher. These two major factors are actually the most important reasons to keep an eye on mainland China and Hong Kong stocks. Because at this stage, after Trump and Xi Jinping have reached an agreement, the China-US trade war over the next year probably won't escalate. Trump has made it very clear to everyone. Next year, he has to run an election campaign, the midterm elections. He can't afford to trip himself up with a trade war. So, under this premise, we can expect that next year, relations between China and the US will be relatively calm. At least compared to this April, things should be more peaceful. So, that's the situation. For Hong Kong stock investors, focus on these: fiscal policy, monetary policy, and the impact of the US-China trade war. Monitor international markets, particularly the US stock market. Next, regarding the positions of officials and investment institutions, let's add some information about whether the Fed and the Beige Book can actually support a rate cut at the December FOMC meeting. As for the Beige Book, don't forget that before every interest rate decision, usually a few days or even up to half a month in advance, the Fed releases the Beige Book. The contents of the Beige Book generally cover several major areas. Of course, it includes things like the economic development of different regions, their perspectives on economic growth, changes in GDP, inflation, as well as the impact on employment levels. It also covers aspects like business investment, household spending, and changes in consumer expenditures. All of these are included in the report. The Beige Book presents all of this, and often, before Federal Reserve officials implement or adjust monetary policy, they use the information from the Beige Book, the strengths and weaknesses it reveals about the economy, as a basis for monetary policy decisions. It's a very important reference. So what did the Beige Book mention this time? It pointed out that recently, in the short term, US economic activity has basically stalled, and the job market is generally rather weak. Employers' willingness to hire has decreased, and prices are rising moderately, not sharply, just moderately, but employment is stagnant. It also mentioned that high-end consumers, their spending is still very stable. What does that mean? It means that people with money still spend freely. They don't hold back. They continue to buy a lot of high-end products because they're so wealthy that the economy doesn't really affect them much. However, aside from the wealthy, the general public's overall consumer spending is actually declining. Of course, to some extent, this is due to uncertainty about the future, as well as the impact of inflation and the tariff war, which are all affecting people's willingness to spend. So he said that high-end consumer spending hasn't been affected. But overall, most consumers are cutting back, and businesses are feeling the impact. As for the outlook, the manufacturing sector remains cautiously optimistic about the future. However, retailers have said that the government shutdown has had a negative effect on consumer spending. Looking at the big picture, we can clearly see that the majority of Federal Reserve officials or regional branches are taking a more conservative stance on the economy. When it comes to the job market and consumer spending, the outlook is also rather pessimistic. In this kind of atmosphere, it actually helps Federal Reserve officials lean more toward dovish decisions when setting interest rates. So there are basically two main directions here. First, the job market is showing signs of weakness. Second, they mention that consumer spending is declining. Why is consumer spending going down? This will make the Fed a bit nervous, make the officials a little anxious, because do you remember yesterday or the day before, we mentioned on the show that in the components of the US GDP, what about consumer spending? Consumer spending accounts for about what percentage? About 70%. Now, within that 70%, it's divided into consumer spending in the retail sector and, on the other hand, spending related to services in the service industry. As for the retail sector, it accounts for about 40%. So within the GDP, 70% is consumer spending, and of that 70%, 40% is retail. So if you multiply 70 by 40%, the total contribution of the retail industry to GDP is nearly 30%. That's why the ups and downs of the retail sector can easily affect the overall GDP and the health of economic growth. This time, for example, the most recent monthly retail sales rate was lower than expected, right? So what should we look at next? It's right after Thanksgiving, this Friday actually. The Friday after Thanksgiving is what we call the start of the Black Friday shopping season. Usually when Black Friday kicks off, people start shopping like crazy. For example, in Taiwan, isn't everyone lining up at Costco to buy things right now? It goes all the way until December 25th, Christmas. Before that, there's Christmas Eve or Christmas Day, and sometimes even up to December 30th, right before New Year's. This whole period is usually the most booming time for discount shopping. So during this period, if retail does well in this final month, whether it's Walmart, Costco, or any of the major department stores, if their performance is strong and discounts, if all the discount events kick off, what will happen? It will push up retail revenue, profits, and sales figures. If those numbers surge, of course, it will help boost the US GDP, so it won't end up being too bad. That's why I think everyone needs to pay close attention to the changes this month and wait and see. If the performance is good, I believe every stock market will still have some upward momentum to look forward to. Of course, as for the content about the pandemic and the usual situation, we just discussed that. These factors are also favorable for a rate cut in December. At least in this regard, it's supportive of a rate cut. Now, what did Goldman Sachs say? Goldman Sachs is a bit more optimistic. Oh, good evening, OM Bird and Melissa. Good evening, good evening. Goldman Sachs said, the US stock market hasn't this month been pretty volatile? They said that after the sharp correction and volatility in November, in fact, many of the so-called market watching factors, technical indicators or factors, have gradually reset. That means things that were overheated have cooled down a bit, and those that were more out of line, those with bigger deviations, have started to revert back, becoming more neutral. So they said that as panic gradually subsides and investment topics deepen, they believe that by the end of the year, in December, the US stock market will decline. We're about to enter December next month, right? December is what we call the so-called holiday season in the US, Christmas, right? As for the US stock market, the year-end trend, they believe that now, since the volatility has settled and all the indicators have reset, the market in December shouldn't be too bad. So this is something you can keep in mind. Actually, in the past, during Q4 or the Christmas season, it's usually a strong season for stock markets. Markets typically rise more than they fall. Probability of increase exceeds 60 or 70%. So take advantage of this. Finally, in this last wave year end in December, if the index or individual stocks hit new highs or rise, remember, with the stocks you hold when they rise. When stocks hit new highs, don't chase. Instead, lock in profits this year. Take gains. You can sell a third or even half of your holdings. Secure profits and keep a portion for next year's market. Okay, so after reaching new highs, whether it's an index or an individual stock, they usually face short-term selling pressure from profit taking or a pullback after a big run-up. This is the same everywhere in the world. So even though December is seeing gains and the market is still climbing, it doesn't mean next year's outlook is bearish. After all, a major theme for next year is the US midterm elections, which will provide a big boost. With this kind of momentum and support from the bulls, there's a chance for gains this month, and next year still has growth potential. Remember to take profits when prices are high. If there's a pullback to the quarterly or monthly moving average, consider buying on the dip. This is still the safer approach for now. So this is a more advanced part, and I wanted to add a bit more for everyone. As for this news, oh right, speaking of Christmas, isn't that the so-called Christmas rally in the US stock market? Christmas, Christmas, Christmas. Actually, Westerners are more into celebrating Christmas. In the East, like in Taiwan or in Chinese communities, not that many people really celebrate Christmas. Sometimes in the Western world, like in the EU, they celebrate Christmas because of religious beliefs. Maybe they're involved with the church or they're Christians, so they celebrate Christmas. For them, it's like their New Year, and it's also a time for family gatherings. In Taiwan, celebrating Christmas is more about enjoying the festive atmosphere. Speaking of the Christmas vibe, like for me, I live in Bangqiao, and every time Christmas comes around, everyone knows about the new Taipei Christmas land, right? It usually starts about a month before Christmas with the lights being turned on and everything. Then you'll notice that every weekend, the crowds just keep getting bigger and bigger. Every time it's like that. The new Taipei city government in Bangqiao hosts New Taipei Christmas Land. They set up many decorations. Each year features a different theme, like this year's line characters, e.g. Brown the Bear. Christmas trees and ornaments are displayed. Previous years even featured Disney themes. The theme changes annually. Disney themes like Mickey Mouse also appeared. When a new theme emerges, nearby department stores and the city government illuminate the area. It's beautiful. While the lights are beautiful, they cause traffic jams. For Bangqiao residents, the Christmas season is tough because basically that whole area gets jammed. There's always heavy traffic and roadblocks. So if you're going, try not to drive or ride a scooter. If you're in Taipei and you want to go, just take the MRT to Bangqiao Station. Once you get off, you can just walk around the area on foot. That's enough to see everything. Taking the MRT is really all you need. There's no need to drive yourself. Parking is tough, traffic jams are bad, just a heads up. If you plan to go this weekend, remember New Taipei Christmas Land has started. From the lighting ceremony onward, it runs until December 25th, usually extended to December 30th, wrapping up after New Year's. If you have time, check it out. Just remember, with kids or adults, keep everyone together. So many people, it's easy to get separated. So another piece of news, after Thanksgiving today, there isn't much news, so I was just flipping through and found this interesting story. It says the US and Switzerland negotiated a trade agreement, right? Tariffs on industrial exports were 39%, but after negotiations, reduced to 15%. Alright, so tariffs have been lowered, cut by more than half, which is impressive. This boosts Switzerland, as Swiss watches and machinery are extremely competitive. Swiss watches' precision and quality are remarkable. Swiss watches are... So what did he say? Before Switzerland signed this agreement with the US, there were several companies involved, like Rolex, the Li & Fung Group, and others like Chopard, and some Mediterranean industry companies. Anyway, a lot of these are high-end luxury brands. When these executives visited Trump, what were they doing? They gave gold bars and Rolex watches as gifts. The mayor said they were trying to influence tariffs. Actually, I think this news, even though when it broke in Switzerland, people there felt that these senior executives giving gifts to Trump seemed a bit inappropriate. Kind of. The idea is that they try to buy off Trump with money, gold bars, and luxury watches. But honestly, even though this incident was exposed, maybe Switzerland just has higher moral standards. Maybe, I don't know. In reality, this kind of thing happens everywhere, in every country. Take the US, for example, with all the big companies, the so-called Big Seven. If you look at Meta's Zuckerberg, or take Amazon's Jeff Bezos, or Tesla's Elon Musk, or even Apple's Tim Cook. Whichever one of them goes to meet Trump, aren't they all bringing a bunch of gifts with them? Of course they do. Take Tim Cook, for example. Didn't he visit Trump before? He was worried about whether semiconductors would be hit with tariffs, or if Apple products weren't manufactured in the US, they might face hefty tariffs. In order to persuade Trump not to impose tariffs, he said he was willing to invest $100 billion in the US just to build factories. Do you remember that scene? When he visited Trump, what did he give him? It wasn't a gold medal, he gave him something made by Corning glass, a piece of glass. And what was underneath? Underneath was a 24-karat gold base, and on that piece of glass were the signatures of Trump and Cook with an inscription saying, "Wow, this will make America great again, made in America 2025. It's all about praising Trump, saying how great he is. So any CEO or official visiting Trump wouldn't show up empty-handed, right? But with Switzerland, when it came up in negotiations, everyone said these Rolex-type groups were giving gold bars as gifts. Giving Rolexes to Trump is actually pretty normal. It's just, you could call it international etiquette, maybe, or maybe not. But anyway, giving gifts is totally reasonable. After all, who doesn't like receiving gifts? Yeah, so after Trump gets these gifts, of course he's going to be a bit more lenient toward the watch industry, or, you know, the luxury goods sector. At the very least, he won't tax them as heavily. So that's how it goes. So after all that gift giving, the 39% tax dropped to 15%. And that's just the gifts we know about on the surface. As for what goes on under the table, who knows what other countries are giving? Honestly, it happens everywhere, but it's just not out in the open for everyone to see. We're just saying that what Switzerland did makes sense, so just take this news as something to be aware of, that's all. Caesar, good night, sending Corning glass, that's a huge pile, no doubt. And Hector, good night, good evening, and who else is here? Is that Chu Yu Yuan or is it 2383? Good evening, hello, what does Switzerland give? Gold bars? Gold. Gold watches. Just the day before yesterday, I had a classmate. It's Friday in Nanjing, everyone can relax, but now let me ask. Edison May, the day before yesterday, he asked me, he said, "Teacher, do you like the Apple Watch? And do you have any recommendations for mechanical watches? Our group website covers everything. We answer anything, you can ask anything." Pretty good. Some students were the Apple Watch, that kind of digital smartwatch. And of course, it just depends on whether you like it or not. Personally, I'm only somewhat interested in the Apple Watch and digital smartwatches. I'm not super into them because I feel like our phones already give us so much information as it is. I have to check Line, WeChat, Facebook, Instagram. At work, there are tons of notifications and interests. The Apple Watch notifies you when a message arrives. Sometimes it feels like information overload. If I'm off work, I avoid checking messages. But if you're wearing an Apple Watch, messages keep coming. Even if you put your phone away, the watch keeps buzzing and your phone goes off too. So these digital watches aren't practical. I'm not used to it. I even tried a Xiaomi band, but couldn't get used to it. I still prefer wearing a traditional watch. You know, the kind with an hour hand, minute hand, and second hand. So as for which mechanical watch I would recommend, honestly, I haven't done any in-depth research on watches, but if we're just talking about my own habits, I think the top brands are probably the Japanese ones. They're more durable, like Seiko, for example. Or like Citizen, I think these two brands are pretty reliable and the quality's decent. There's also Orient watches, which I think are good too. As for which mechanical watch to recommend, I really haven't done any special research. Some people go for the high-end stuff like Patek Philippe, Piaget, or other famous Swiss brands, Tissot, and so on. There are all kinds. For me, I think watches are just like that. It really depends on your personal habits. You just have to see if it looks good on you and if it suits you. Oh, so recently I went and bought an Orient, specifically the Orient Star, which is a sub-brand of Orient that specializes in mechanical watches. I bought an Orient Star mechanical watch from one of their stores, and it's pretty good. Anyway, I just picked one I liked. When it comes to mechanical watches, I think the quality is pretty similar across the board, not much difference. If you buy Swiss or Japanese, as long as you stick to the major brands, the top few, you really can't go wrong. Alright, and of course, if any of you are really into watches and have done your research, feel free to leave a comment and share which watch brand you think is the most durable and offers the best value for money. Maybe you have a particular mechanical watch or brand you'd recommend. Let us know. As for this watch, I basically use quartz watches. They're handy and convenient. With a quartz watch, when the battery runs out, you replace it and it works. One battery can last 2 years. Mechanical watches, however, don't need batteries. When a mechanical watch stops, you wind it up and it works. Each type has its own advantages, and they can be matched with different outfits or occasions. Leave a comment about which mechanical watches you'd recommend. Hello, new student, right? Hello, hello, hello. This is Dino886Bo. Hello, good evening, welcome to class. Every night at 9 o'clock, we have an evening program in the group. There will be a live broadcast. You're welcome to join us online and interact with everyone. Now, moving on, let's briefly look at the news about ASML. ASML is from the Netherlands, and the headquarters is located in the Netherlands, but in fact, its main controlling and operating rights are held by a mainland Chinese company, which seems to be called Wingtech Technology. Previously, in September, the Dutch government, citing national security reasons, directly took over the Dutch headquarters of ASML. The government took direct control. This is a big deal. With the government taking over, of course, China was very unhappy about it. China was displeased, so what did they do? So the Chinese subsidiary, which originally produced a lot of things like automotive chips and electronic chips, ended up not shipping semiconductors anymore. They just stopped exporting them. So ever since the Dutch government took over in September, over the past month or two, the Dutch government and the European market have been in ongoing discussions and negotiations with ASML. So far, there hasn't been any response, but China has made it clear. In any case, this is just It's like a side story to the trade war or a side story to national security, something along those lines. So will Nexperia eventually ship products to the whole world? Because Nexperia actually ships billions of chips every year for automotive and various electronic uses. Will they really stop shipping completely? I don't think it'll go that far. With officials from the US, Europe, and so on continuing to coordinate, I think in the end, Nexperia will reach agreement with the Dutch government. Revenue should be fine. This news has minimal impact on the overall market, be it European or US stocks. I saw this news today and wanted to share it as an update. Next, moving on to the live broadcast part, the rate is at 4% and the terminal rate is at 3.67%. The number of rate cuts is still holding at about 0.8 times. So honestly, in December, will there really be a rate cut? Currently, the probability is just over 50%. It's not over 50% to 99% where a rate cut is basically certain. It's about 55 to 60%. Currently, the economic data is favorable for a rate cut by the Federal Reserve. As for the so-called economic conditions, as we just mentioned, they're leaning more cautious, more pessimistic about the job market, or you could say there's a decrease in consumer spending. There's also hope that the real estate sector will move in the direction of a rate cut. All of these factors are positive for a rate cut, so overall, I think the chance of a rate cut is about 60%. But as for the remaining facts, I think there are still some variables. Regarding these variables, before the Federal Reserve's interest rate decision in the early morning of December 11th next month, there's less than half a month left. So we'll just have to keep watching and see what happens. In this half-month period, there will be some economic data and some economic events. Whether these can change the Fed's decision to cut rates again in December, I think we just need to keep watching. Waiting another 10 days is not too long, and after 10 days, we will probably be 80 to 90% sure. Right now, the probability of a rate cut is about 60%. The US dollar index rose 0.17%, remaining below its 200-day and quarterly moving averages. Geopolitical risks. Honestly, there are three major problems with the Russia-Ukraine situation. Putin himself talked about it today. He said that as for the peace agreement, there still isn't one. There's no final version yet. Of course, Russia and Ukraine have been negotiating things like prisoner exchanges and humanitarian aid, and those talks are ongoing. Putin also reiterated one thing. He said he agrees with the 28-point list from the United States, using it as the basis for negotiations. He also mentioned that the American delegation will go to Moscow next week for these discussions. They'll be negotiating with the US about things like arms control and other related issues. Anyway, no matter what, the three questions written below, I think none of these three questions have any answers at the moment. These three questions are basically about Ukraine ceding territory to make peace, like Donetsk, Luhansk, and then Donbass, and so on. All these regions would have to be given up. So that's about 4 or 5 places that would need to be ceded for peace. I think it's going to be really hard for Ukraine to agree to that. And then another point is to reduce the maximum size of Ukraine's military to 600,000. This might make Putin feel a certain way, like why make this change? Because right now, Ukraine's armed forces are about 300,000 people. So if you raise the upper limit to doubling it to 600,000, with 600,000 being the absolute maximum, they really don't want it to go above that. Putin might feel that even 300,000 is a lot, and now they're raising the ceiling to 600,000. The third point is that Ukraine, or rather the EU and European countries, should not let Ukraine join NATO. I think that's also a tough issue. So, in the end, how these three things will be negotiated in the future, and whether a better consensus can be reached, I think we still have to wait and see. But as for the issue of geopolitical risk, things do seem to be cooling down, albeit slowly. There's also some news about Venezuela. Actually, we've talked about this a long time ago. In reality, it doesn't have much impact on current geopolitical risks, so it's just something to take note of and move on. Basically, it's about Trump. Trump wants to get involved. It's about sanctioning these drug trafficking groups, whether by sea or by land. So Trump said that there will soon be so-called ground attack operations. Now, for example, B-52H bombers are already conducting exercises in the Caribbean. As for whether this will ultimately happen, if they really send in the Third Army or actually launch a ground war against the Venezuelan drug traffickers, we'll just have to wait and see. If this so-called ground war really does break out, and it's not just limited to naval blockades, then to some extent, we might see oil prices fluctuate a bit in the short term. But if you're asking whether oil prices will suddenly shoot up from, say, $59 to $80 or $90 in one big jump, that's unlikely. It's not going to be that extreme because, as we've mentioned before, Venezuela's oil production, after years of sanctions, is currently it's ranked around 20th in the world. Compared to Saudi Arabia, the US, or even OPEC, Venezuela is too far behind. Its impact on global oil demand or supply is not significant. Crude oil prices rose slightly by 0.73% today, but 25, 50, and 200 moving averages still trend downward. Has the bear structure changed? All right, so on Sunday, as we just mentioned, let's keep an eye on China's official manufacturing PMI for November. That should be enough for the financial report part. Okay, good night to everyone tuning in late. Also, good evening to 000. Is a rate cut really only a good thing? Rate cuts are indeed positive for the stock market, that's true. But I still want to remind everyone, some people are asking, what else is there? Hamilton and Tissot, right? Thanks to Dino886 for sharing. He said Tissot watches seem pretty good too. Hamilton watches, they're bigger, right? Limlin also asked if rate cuts benefit. Rate cuts are good for the stock market and economy, but be careful. Often people expect rate cuts, and when they happen, when the rate cut actually happens, on December 11th if confirmed, as anticipated, caution is advised. On the rate cut day, good news is often priced in, so the market might open high and then drop. This is the concept. Similar for rate hikes. Rate hikes are often seen as bad for markets and economy, and when a rate hike is coming, everyone worries, thinking they curb inflation. When the day of the rate hike finally arrives, what usually happens? The shoe drops, which means the negative news has already been fully absorbed by the market. So sometimes it's really a case of buy the rumor, sell the news. Looking at rate cuts from a medium to long-term perspective, they are indeed positive for the economy and the stock market. There's no doubt about that. But in the short term, when the actual announcement of a rate cut or hike happens, the market often moves in the opposite direction. Alright, so I wanted to add a bit more on this point. As for earnings reports, next week just keep an eye on Salesforce, HPQ, and APHP. HUYU Technologies related earnings reports should be enough. For the rest, in the second half, other instructors will help everyone follow up on these topics. Alright, as for TrendForce, they mentioned the top 10 technology trends for 2026. Let me quickly read these 10 trends for everyone. Once you hear them, you'll probably realize that the stocks that'll make money next year are pretty much the same as the ones making money this year. Alright, it's pretty much the same. So what's included? They ask, what are the top 10 tech trends for next year? AI servers, cooling technologies, for example, liquid cooling. If you look at Taiwanese companies, which ones might be involved? Ores, Chonqi, and Gentech, right? These companies are the ones to watch for cooling. As for AI servers, companies like Wistron and Wiwin and so on are all involved. Then he mentioned HBM expansion. High bandwidth memory, or HBM, is very important because in AI development, you need very high-level bandwidth to keep running computations and require high capacity. The expansion of HBM involves companies like Micron, Samsung, and SK Hynix. Just remember these three. Also, things like NAND flash are enhancing AI capabilities, so you can also keep an eye on companies in the NAND flash industry. In addition, there are energy storage systems. What are energy storage systems? Because when AI is running computations, it needs power and electricity, and even the database has to be large and stable enough, and the power supply also needs to be secure. What about related energy storage? For example, higher-end power supply units from Delta Electronics are worth watching. Also, there's demand for third-generation semiconductors, or advancements in manufacturing processes like 3nm and 2nm technology. Next year, TSMC's 2nm process may see strong growth. Consider companies like Samsung, for example. Companies like TSMC and a few others are more advanced, especially in terms of patents and manufacturing processes. Then there's also humanoid robots. When it comes to humanoid robots, honestly, there are only a few well-known companies in Taiwan. For example, there's Daming, which is under Kuo Kwangming. They make robots, though I'm not sure if it's for handling equipment or something else. And then there are companies like Canon, Neng Shui, and Zeed, just a few of these, maybe Mengli, and so on. But I still want to tell everyone, when it comes to the components for humanoid robots in Taiwan at present, in terms of how widespread robots are, honestly, there's still some time to go. For robots to really transition from being used only in businesses to becoming common in households or even in daily life, where they can help people with all sorts of tasks like grocery shopping, doing laundry, cooking, or even being police officers, traffic security, many roles, and it will take long. It won't happen as quickly as autonomous driving. Autonomous driving might come sooner. Autonomous driving, looking at FSD, maybe by next year or the year after, definitely before 2027, it should be up and running. But for robots to go from being used in businesses to being used in homes, I think there's still a period of time needed for things to develop. So, since it's not going to take off that quickly, the robotics industry chain in Taiwan is more of a concept play than something with real immediate impact. Let me say it again. For now, the robotics sector in Taiwan, in the short term, will have more of a conceptual effect than actual substantial contribution. When it comes to revenue or explosive profits, we can't see the rapid growth AI is experiencing. It's not there yet for robotics, but in the future, it's a promising theme. How many years it will take to develop, I think it's still a while. Now, moving to OLED display technology. In the future, it's likely that Apple's iPhones, iPads, and so on will all use OLED technology, including foldable phones as well. I've heard that Apple might launch a foldable phone in 2026, maybe next year, or in 2027. As for foldable phones, whether they're actually good to use or if people in general really want them, I'm not sure. Feel free to leave your thoughts in the comments, if Apple really does release a foldable phone. Right now, Huawei already has one, a trifold phone, right? Along with... it's like submitting a memorial to the emperor, this trifold phone. And then who else? Samsung also has a foldable phone. They're all being sold, but not very well. It's just a niche product, not selling like regular phones. Still, they do have a certain market share. So what about Apple? If they really launch a foldable phone in the next year or two, are people really willing to buy it? Feel free to share your thoughts. Someone said, lowering interest rates cures all problems. Yeah, in principle, lowering interest rates does fix everything. Remember what I just said about the dust settling? The watch with the most accessories is from Longines. Okay, thanks to Caesar for sharing. Someone said, Hegel wouldn't use Apple's foldable phone. When it first comes out, it's going to be really expensive. As for AR glasses, well, we think that head-mounted devices are usually pretty bulky, but AR glasses are really light and also more affordable. For example, Meta has partnered with Ray-Ban sunglasses. So for AR glasses, he thinks that next year, according to G-Bang Technology's list of the top 10 tech trends, the evolution of AI will also be a major battleground for all the big players. Finally, let's talk about autonomous driving. When it comes to autonomous driving, of course, we have to mention Tesla. Tesla includes things like FSD, full self-driving, and also, for example, in Austin, Texas, their fleet might keep expanding and continue to grow. These things, and even things like Waymo, Google's autonomous driving division, are all worth keeping an eye on. This year, these topics are being hyped up, but next year, these technologies will gradually become more and more stable. So these are the main 10 technology trends that TrendForce just mentioned. It'll serve as a framework. Some of these things, this framework, might already be underway this year. For example, things related to AI, autonomous driving, and the expansion of many HBNs are all currently in progress. Some of them might only really take off next year or the year after, like Apple's OLED, foldable phones, and things like humanoid robots. So you might want to keep this information in mind. If you're not sure which industry to pick stocks from next year, if you don't know which individual stocks to choose, just list these top 10 technologies and keep it next to your computer. If you still don't understand, that's okay. Just watch the Morning Call show with Mr. Fan from Quinying, and in the evening, tune into our Quinying Goodnight live streams where we discuss U.S. stocks. So check in the morning, check again at night, and keep this top 10 trends list on your desktop. That should be good enough. 8 or 9 times out of 10, your investments next year will be more stable. That's how it should go. If not, well, that just means everyone is still working hard, either working or taking notes. All right, now let's look at the supporting evidence. Bank of America Securities, so Bank of America, said that this week, while the market was buzzing about the possibility that Google's TPU chips might replace NVIDIA, there was talk that NVIDIA's market share could be cut by at least 10%. Meta, so what did Meta say? Meta might want to buy Google's TPU chips and reportedly has already bought several $1 billion worth and doesn't want to use NVIDIA's chips. Actually, some of this is just rumors, but some of it is based on facts. But after really looking into it, let's break it down a bit. NVIDIA's GPU is a general-purpose chip, and honestly, its performance is excellent and its features are great. It's just that the price is a bit high. But as for whether Google's specialized chip, the TPU, can truly and completely replace NVIDIA's chips, I don't think so. After all, some enterprises, high-end businesses, public cloud companies, or government agencies, they will still choose to use some of the more stable and higher performing GPU chips. So people who buy NVIDIA, or sometimes AMD's related chips, are usually these kinds of customers. These two companies basically have an oligopoly, almost a monopoly, really. So this thing has both broad applicability and strong demand. Now, if you really want to fully train a certain AI function or capability, or train a specific AI, or actually, it doesn't even have to be AI. For non-AI applications, sometimes you need to specifically train something, like robots or training a chip experience, or things like autonomous driving and so on. In these cases, you might need chips for design and production. At that point, maybe these companies will look for... They might go to Marvell or Broadcom to design the related chips. They might not necessarily go for those expensive NVIDIA chips, which can cost $30,000 or $50,000 each. They just can't afford them. So these two areas, as we've mentioned, will develop along two separate tracks. In other words, the TPU segment will grow, and the CPU segment will also continue to grow. So it's a dual-track operation, and it will only add more and more different application scenarios, allowing the entire AI market to keep expanding. So it's not like Google rising up will cause NVIDIA to fall. That's not going to happen. Both sides have their own demand, and both are growing. That's why I say the AI market isn't saturated yet. It's still in a stage where enterprise demand far exceeds supply, whether it's for TPU chips or for NVIDIA's widely used general-purpose GPU chips. The demand for both types of chips is still booming right now. Under this framework, AI isn't likely to head toward a bubble in the short term. Since that's the case, we can expect that in the upcoming fourth quarter earnings reports, whether it's for leading companies or the broader market, and even looking ahead to next year's reports, profits and revenues will remain at relatively high levels. That's why Bank of America said that for the three chip giants, NVIDIA, AMD, and Broadcom, they remain bullish. As for the future scale of the AI pharmaceutical sector, it's expected to grow from over $240 billion this year to $1.2 trillion by 2030, a five-fold increase. This is just like what I wrote below. Take the small MIMO, for example. Just think of Google's TPU, which I just mentioned is an ASIC chip, while NVIDIA uses a general-purpose GPU. These two are like, as I always say, the world of shovels and power drills. Shovels and power drills. In this world, if you want to mine, whether it's gold, copper, or coal, if you've heard this story, we've told it several times, right? If you go to Jufen, Ruifang, or Jingawashi to mine copper or whatever, it doesn't matter what you're digging for. There will always be a market for power drills because you need to dig. And of course, there will also be a market for shovels. For some small gold mines or little diamonds, you can't just use a power drill to dig. If you do, you might just break the diamond deposit, right? So you definitely need shovels and pickaxes to work with. That's why these two tools can't completely replace the world of power drills, and it's impossible for them to fully take over the functions of shovels when it comes to mining. These tools just can't be replaced. Now, if you only look at output, whether it's small or large scale, can you really use that output to completely take over the power drill market? Of course not, because when you need to blast, to dig, when you need to mine on a large scale and with greater efficiency, you can't just use a little shovel and keep digging and digging. You're not planting flowers or vegetables here. That's just not possible. So if you keep digging, you won't even be able to dig up a single flower, which is why you need to look at whether you need a power drill. The market for power drills and the market for output will each have their own place and shine for hundreds of years. So this is just a reminder for everyone. This week, even though there's talk of the so-called AI chip war, remember that in the future, these two will basically form a dual-track AI system. Google will keep working with NVIDIA, and of course there will still be an immediate market for that. Oh, and someone asked if I could talk about quantum computer stocks. As for quantum computers, I might not have had time to prepare today, because a lot of their names in English start with things like QT or R or something like that. When it comes to quantum computers, I think they're still in a stage, still in what you might call the so-called let's talk about it one by one. Right now, it's still more like a kind of simulation in terms of intention. It's not yet at the stage where it can be mass-produced, manufactured, and make everyone feel like, wow, quantum computers are so powerful that they can maybe replace GPUs, CPUs, TPUs, and all that, making computers run with incredible performance. And maybe calculations would be thousands or even tens of thousands of times faster than traditional computers. Right now, it's still at the stage where we're mostly working with theoretical values. Everything is still running on theory. When it comes to actual mass production and real-world applications, I think there's still some way to go. But as the saying goes, some major international companies, including NVIDIA, Google, and Microsoft, are already involved. They're all working on this area. Quantum chips and quantum computers. So in the future, could this become a leader in the field of computing, possibly replacing the current scale or technology? It's possible. But it won't happen that quickly. It won't be that fast. So to put it simply, right now these quantum computer concept stocks are more about dreams than reality. Most of these quantum computer companies are valued based on dreams, not actual revenue or profits. And you can't really talk about PE ratios or stable valuations. Their appeal is more about the potential story than real substance. That's my answer to this quantum-related question from No Normal. Also, someone mentioned that PP said foldable phones are really useful. Yeah, some people just like using foldables because the screen is bigger. For me personally, I probably wouldn't use a foldable phone because it's a bit heavier to carry around, since when you fold it up, it's bulkier. I don't know how much Apple's foldable phone will weigh when it comes out. Of course, the lighter the better, but in a way, there's something pretty interesting. If these foldable phones keep getting more and more folds, like folding it twice, then flipping it over and folding it again to make 4 folds, if you unfold it and it gets that big, like the size of an iPad, then I might as well just buy an iPad. Why would I need to buy a phone that folds twice or even 4 times? That kind of feels a bit unnecessary. So I don't really know. I don't know what everyone else's habits are like. For me, if I want to use something like an iPad or a bigger device, I'll just use a notebook. I'll use a notebook. And if I want a smaller screen, then I'll just use a tablet. If I don't have any expectations, I'll just bring my phone. That's basically the idea. So should they replace each other? Should this phone, folding twice or 4 times, become an iPad? I wouldn't use it that way, as each device serves specific needs. Now about AMD. Bank of America mentioned Nvidia, AMD, and market outlook. AMD has fluctuated around its 50-day moving average. If it gets back above the 50-day moving average soon, that's a positive sign for its future trend in performance. However, getting back above it is one thing, just one part of the equation. Don't forget that the current 20-day moving average is sloping downward. In other words, even if it manages to get back above, the next challenge will be the downward sloping monthly moving average, and that downward sloping monthly moving average will definitely create short-term resistance. So honestly, the room for a rebound is not very big. But that's only if in the future this 20-day moving average can shift from declining to rising. Only then will it actually provide support, but right now it doesn't. If this rebound reaches the red 20-day moving average, it might run into short-term resistance, so keep an eye on it. Basically, as long as support holds steady at the 50-day moving average, there shouldn't be major issues. For short-term resistance, just look at the 20-day moving average. It's fluctuating within this narrow range. As for AMD, in the past couple of days, it went up by 3.93%, which is actually pretty good. Broadcom, of course, is really strong, continuing to hit new highs and approaching the $400 mark. That's not just because of its collaboration with OpenAI, but mainly because it's benefiting from its connection with Google. Google's TPU Dream Online 3 is selling well and performing well, and the market response has been very positive. Meta also wants to use this TPU GPU, so they're working with Google. For ASIC chip manufacturing and design, that's Broadcom's domain, so Broadcom benefits from all sides. When one rises, all rise. That's why Broadcom's stock price has been volatile, recently hitting record highs. This is the main reason. So these companies are also provided here for your reference. As for the last piece of news about Apple, just take a look at it. Today, there was a report saying that the Indian government might introduce an antitrust law to challenge Apple. Why? Because they say that in Apple's app market on their phones, there are many behaviors that abuse their dominant market position. If that violates the antitrust law, Apple could face a fine of $38 billion. That's a huge amount. Pretty scary. Even the EU doesn't dare to impose such a high fine. Do you think India would? If the EU doesn't dare, would India really go through with it? And if India actually does fine them, wouldn't Trump be up in arms about it? They wouldn't just be furious. If Trump gets involved, he could immediately raise tariffs from 25% to 50%. Would India cheer for that? India would be for it. India operates that way. This $38 billion fine, despite early next month's hearing, is unlikely to happen. The chances of actually getting fined are pretty low. Okay, to be honest, if there is a fine, it would be less than 30%. The likelihood of a fine is extremely, extremely low, because as you all know, the EU previously introduced the Digital Markets Act. Along with the Digital Services Act and the Digital Markets Act, these kinds of antitrust regulations were proposed to put some digital controls on these big tech giants, which is also related to antitrust. But after the bill was proposed, Trump basically said, go ahead and try it. If you target our international tech giants, I'll hit you with tariffs and crush you. He threatened the EU with tariffs, but none were imposed. Earlier, he said he'd slap tariffs on the DSA and DMA, totaling tens or hundreds of billions, but again, none were actually imposed. For those that did get tariffs, it was at most a few billion, perhaps 10, 20, or 30 billion US dollars. They threatened tariffs, trying to silence everyone. This way, no country dares to impose a $381 tariff. In my opinion, the chances of this happening are low because trade war considerations are at play. Take this news with a grain of salt. Honestly, as for India, they wouldn't dare to slap a $381 tariff on Apple. If they did, Apple would say, fine, I'll shut down my factories in India and pull out. Then, if India wants to export anything, it would be a problem. If Trump suddenly says, I'm going to double all tariffs, would India dare to object? This Apple situation? Check the news. It's unlikely. Apple's stock price is still climbing along its 20-day moving average. Just a couple of days ago, it hit a new all-time high above $280. So these two companies, including Google and Apple, the so-called AA companies, are currently two very important stocks that are driving and supporting the U.S. stock market in the short term. And what about the U.S. stock market before the opening? The first listed company is related to disk manufacturing, specifically SanDisk. SanDisk was added to the S&P index as a component stock, so its shares surged 5.77% in pre-market trading. In addition, Micron Technology also jumped 3%, mainly because companies like Morgan Stanley believe that with the development of AI, companies like Micron, disk manufacturers, and Samsung, with their HBM and other high-end memory products, will benefit from this trend. We've talked about how high-frequency memory will see huge demand and is selling quite well. That's why Morgan Stanley specifically mentions SanDisk and Micron. So before the U.S. market opened, these two companies saw relatively larger gains. Coinbase also rose 2.5% in pre-market trading. Additionally, companies like Carnival, Albemarle, Intel, and Google were all up about 1% to 1.5% before the market opened. On the downside, there's Carrefour and Kraft Heinz, which dropped 1.37% in pre-market trading. Oracle also fell by 1.29%. Other than that, there aren't many companies declining, and there aren't any major tech stocks among them. So overall, I think today, after Thanksgiving, there's no stock market today, and today's trading session is relatively short. It ends 3 hours earlier than usual. So the trading time is shorter, but it seems like there aren't any major companies with big drops that could impact the market. Overall, the market still leans bullish, and this bullish trend has a good chance of continuing through Christmas, which is something to look forward to. As for the Dow Jones Index, although it has climbed above the 20-day and 50-day moving averages, in the short term, I think it's a sideways movement with slight upward bias. Despite crossing above the monthly and quarterly moving averages, the current monthly MA slopes downward. In the short term, the downward monthly MA bend might create pullback or resistance. There might be some pullback, but has it turned bearish? No, it hasn't turned bearish, so there's no need for undue concern. It rose 0.67% in recent days. Short term, it fluctuates around monthly and quarterly moving averages. The Philadelphia Semiconductor Index also rose 2.76%, again challenging the monthly moving average resistance. Just like the Dow Jones, they're consolidating around the monthly and quarterly moving averages. When it comes to individual stock performance, stock selection is key short term. As for the Regional Investment Index, it's doing well. It's stabilized above the monthly moving average. If you look at its movement, you'll notice the monthly moving average is now sloping downward, and when the monthly moving average slopes down, it tends to suppress upward momentum. Suppressing upward momentum doesn't help. It actually holds back the rise. But in fact, as long as prices stay above the quarterly or monthly moving averages, the overall bullish momentum and structure haven't been broken yet. They're still intact. It's just that among the stock prices of the Magnificent Seven, Meta is relatively weak, Amazon fluctuates, and Tesla consolidates. The stronger ones are probably Google and Apple. Microsoft is weaker like Meta. There are both gains and losses converging. We can see that, structurally, the indices are also fluctuating and consolidating around the quarterly moving average. So looking ahead, whether it's the so-called peak season rally in December or even into next year, 2024, whatever the top 10 tech stock industry trends may be, it's worth keeping them in mind. For example, at this stage, when it comes to investment choices, individual stocks are performing better than the indices, but I still want to remind everyone to pay attention to position management. Remember, don't go all in. That's all for tonight's group update, bringing you the latest news before the U.S. stock market opens. If you found this helpful, please like, subscribe, and share during the break. Finally, I wish everyone smooth trading. See you next week.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.